Welcome to the Silicon Slopes podcast. Today, we are joined by Greg Hyde, who is a partner at Squire & Company, and Joe Spillner, who is a tax manager at Squire & Company as well. How are you guys?
Good.
Doing great.
Well, thank you for taking the time. Appreciate it. Let's start with what is Squire & Company? What do you guys do? And how are you kind of plugged into the local ecosystem here?
Well, Garrett, we're a CPA firm. We love trying to solve problems, right, for our clients, big and small. We just love being able to help our clients solve their problems.
And those problems involve taxes and kind of wealth management, all sorts of things that require a little bit of math and a spreadsheet, right?
Yeah, exactly. And everything under the accounting umbrella is kind of falls into the house here. So, anything from bookkeeping to tax to audit to wealth management. We like to be a one-stop shop for you.
Yeah. And so there's like good audits and bad audits, right? What is an example of like a good audit, and when's a good time to do that?
No, great. There are good audits and bad audits. They can be your friend, or if it's the IRS, most often they're your enemy, unfortunately. But most of the time, a good audit is when you might be a startup looking for fundraising or lending services from financial institutions, and they need to audit financial statements in order to kind of do their due diligence. So those are always in our mind the good audit. We're trying to work with the taxpayers to put together financial statements so that way they look very presentable to financial institutions, angel investors, VCs, whatever it may be.
Got it. And as with all things in life, certain people and organizations are organized and some are not. For a disorganized client or customer, what's the process like to get it, the audit done with like fragmented information? I'd assume like long email chains, drop boxes. Like, how's the process for the disorganized versus the organized?
Yeah, that's a great question, Garrett. All clients have different levels of organization. Yeah, so it's just like you said there, right? These days it's very rarely is it paper, right? It's using drop boxes and portals and things of that nature, and holding the client's hand, particularly where it's the first time through. There can be a pretty long list of documents that we need, but we help you through it and keep the information needed list to the minimum, right? Rather than throwing the whole kitchen sink list at you.
Got it. All right. So with startups, like PowerPoint and a Dream, all the way to Series B, C, there's still like doubts and I's not getting dotted and T's not getting crossed. And we've all heard, the horror stories, whether it's cap tables wrong or off, or there's some legal issues or copyright, patent, any number of things usually pop up. And your guys' world, you mentioned hand holding. It's probably better to get squared away in the early days rather than try to fix the mess after the fact. So for kind of let's talk about early stage startup. How do you guys interact with them, and what's kind of the roadmap for those types of companies?
Yeah, Garrett, we really believe also in a team approach, particularly when things are getting started. Although Joe mentioned that we do provide a lot of services in-house, one important thing is to have good legal counsel involved, right? And also being sensitive to not doing double the work, right? Being efficient and looking ahead and anticipating, problems that lay ahead. So, one of those big things is talking through the issue of choice of entity and also, oftentimes we'll go the route that's going to provide maximum flexibility, because, and haven't we learned over the last few years that being nimble in business is just crucial in order to just survive, let alone to thrive.
Yeah. So I get asked this question all the time, and I'm not a subject matter expert like you guys, let alone a lawyer, but there's SCorp and SCorp and LLC. In painting with a wide brush, in general, what's the best approach for like the corporation for a startup?
Oh man, you're gonna get the worst answer that us accountants rely on heavily, and that's it depends. Every situation is different, and I love that you already kind of mentioned the pre-planning that's associated with this, and how important that may be. And so, it really depends on a number of items from the legal side. And again, a disclaimer: we're CPAs, we're not the attorneys here, but what kind of protections there are needed, from limited liability to unlimited liability. What you're going to see there, what kind of formalities need to be taking place with states, what kind of institutions are going to be involved in the future. And then there's the tax side, which is kind of our bread and butter, but essentially, what's the long-term strategy of the company? Are we looking to have this thing be profitable and take out those profits and distribute them up to the owners? Or is this something that we're wanting to grow into a unicorn and potentially have a transaction in the future? So it really depends. Not to get too nitpicky here, but kind of the general sense that I often see is, if you're going to be a profitable company and you're looking to distribute the profits up to the business and aren't planning on a transaction anytime in the near future, maybe it's going to be a legacy business, then an LLC taxed as a partnership is quite often most beneficial, because you're not subject to two layers of taxation. And then, whereas if maybe you're looking to say, hey, this thing may be sitting in a taxable loss for a long time because we're going to plug every dollar back into the business, and we just want to grow this thing up and have a very large valuation in the future and potentially have a transaction, that be minority or majority change of ownership, then a C corporation could often be very beneficial, because you have a lower taxation rate right now at 21%. And there could be a much better tax implication at the time of a transaction, where maybe you sell off your stock and it's subject to just one layer of tax at the individual level, of which is capital gains rates. So long story short, as I know it's a long-winded answer, but it does depend kind of on what the long-term strategy is of the company.
Got it. Yeah. And so if you make the wrong decision or don't make the decision and you let it linger, there is going to have to be a reckoning and a cleanup, right? And we've kind of heard those stories. So with all of the variables, it's probably smart to talk to folks that know. And at least, with that answer that you gave, there's answers and options, and then the entrepreneur can at least make an educated decision on that. Couple of questions on a little bit of a tax deeper dive. So death and taxes still holds. But there's all sorts of tax loopholes or tax rules or ways you can get burnt with taxes. And as you mentioned, that's your bread and butter. But some of these off the top of my head, maybe like R&D credit, QBI qualification, QSBS qualification. If you could hit on a couple of these, maybe in a little bit of a deeper sense, and provide some clarity on what these things are.
You bet. Yeah. You mentioned some of the important ones that are out there, Garrett. I'll talk for just a minute about like QSBS, and then maybe I'll let Joe hit another one of them. So QSBS, this is one of the reasons why companies will structure as a C Corp. It is a C Corp provision. QSBS, if you meet the various requirements, you can, upon an exit event that Joe mentioned, you can have a portion of your capital gains be totally excluded from tax, and that applies for both federal and Utah purposes. Some states don't follow that. California, for example, doesn't follow the QSBS exclusion provision, but it can be a pretty sweet deal. If you're looking at, and we've had clients do this, multi-million dollar gains, right? If you can exclude, 50 or 75 or even 100% in some cases, you can exclude that gain from being taxed. That's something you want to pursue, and yet QSBS is something that the structuring has to be right up front, and you have to meet a number of different requirements. It needs to be a 5+ year hold, and there are other things there. But yeah, QSBS, qualified small business stock, or 1202. Those are the different terms for it, but that can be a pretty sweet deal.
Yeah, no, for sure. That's one of the, we don't have very many home runs in the tax world, but that's definitely one of them where a potential very large exclusion of gain is something you don't very often get anymore. At least it seems like the opportunities are getting smaller and smaller. And then Gary, yeah, you mentioned R&D credit, and man, this is one of those ones where it's a no-brainer in my mind. I think the biggest hiccup here with R&D credits, meaning research and development tax credits, is so many companies and startups are not aware of the opportunity that's available to them. They hear research and development and all they think is, a scientist in a white lab coat, messing with beakers and doing all that and pouring one to another. And that's so far from the case. This is really a tax incentive that the government provides businesses to help drive innovation here in the US. And so it's open to so many more industries, again, than what's kind of thought about. So, it could be anything from, your typical pharmaceuticals to your engineering to computer science is explicitly said to qualify as well. And it's one of those things where you kind of get your cake and get to eat it too, where you still get a tax deduction for all the dollars spent on your research and development activities. But on top of that tax deduction, you could actually get a dollar for dollar tax credit as well. And so, and yeah, like I mentioned, the biggest thing is these startup companies that are, maybe doing computer engineering and just think, oh, research and development, yeah, we're doing that, but we don't think we'd qualify. Man, you can get essentially, on average, I would say it's about a 7% tax credit to R&D expenditure. And there's a number of items that qualify as what's considered a qualified R&D expenditure. But man, if you are doing these activities, and without a doubt, it's always worth asking your tax advisor, hey, I've heard about this. Do I qualify? It's one of those things that without a doubt is a no-brainer. And essentially it's, just to add a little bit more, it's an income tax credit, dollar for dollar tax credit. And then a lot of companies are thinking, well, shoot, I'm a startup company. I don't have an income tax right now. We're operating at a loss. In fact, we may be projecting to operate at a loss for a long time. And so recently there was a new tax provision that came out where you could actually apply some of this R&D credit against your payroll tax. And so then again, it's these companies thinking, hey, yeah, maybe I've heard of the R&D credit, but we don't have income tax liability. But shoot, they don't realize they could get some cash in the pocket tomorrow by going in and seeing if they qualify for this payroll tax election, get some cash in and immediately pop back into business. And again, there aren't many home runs. And I know we just mentioned one, but this is another one as well that's afforded to so many more companies than they even realize.
Yeah. So you've mentioned a few times that, they don't realize, right? And I think that happens with big business, small business, complicated, easy, all of that. One is because the rule book's really big. And two is it changes every once in a while. Sometimes it's good, sometimes it's bad. Like the flavor of the year. I remember a few years ago, there was like opportunity zones and tax incremental financing, and then sometimes they just like drift off into the sunset, at least in the common vernacular. But I wouldn't know what's on the books or what's not on the books. How often do you guys meet with your clients and update them on changes or tweaks or new opportunities?
Garrett, and right now, as many of our listeners are probably aware, right now Congress is hashing through details of yet another significant piece of tax reform, right? And so, yeah, for us, we've been in front of that with our clients, letting them know that it's coming, and have been doing so since really since last year. And so, as far as how often do we meet, definitely it's at least once a year. But as law changes are being talked about or implemented, right, as clients have transactions, as changes come up, there are clients that we're in touch with weekly. Then there are some that don't need many touches. But boy, with as you mentioned, as the rule books change, that's just hugely important for clients to be aware of.
Yeah, I'm flying though that not every company and entrepreneur is going to bed at night reading the tax law changes. I thought that's something that everyone loves to do, not just us nerd CPAs, huh?
Yeah, I have it on good knowledge that they do not do that, and unless they have insomnia. And I also have it on good knowledge that it is a service that is, kind of vague to a lot of these folks, and so unpleasant at times. Like, even though you might not have the best structure, or the best plan going forward, but you can't bring yourself to like worry about it, because you still have to like run the business and grow the business and all of that. So the ROI for the entrepreneurs and these startups is pretty easy, right? With you guys, it's we will pay a service fee and retainer, whatever your business model is, and won't worry about it. And we can keep growing the business, which is what I assume you guys would like, right?
Yeah, exactly. We like to let you entrepreneurs do what you're good at, and leave the stuff that you don't enjoy doing just to us, for sure. Yeah.
All right. So you guys do a lot of things. How do you guys, as Squire and Company, decide what new services or products to offer your clients? How do you make those decisions?
Garrett, it's just like the entrepreneurs out there. Growth opportunities come as you look ahead and foresee needs. And, sometimes there is a little bit of a need that is already, showing up, right? That you're seeing. And sometimes it's a thing where, you take your best shot and you think, this area is going to be hugely important. A good example of that, Garrett, is our whole advisory practice is something that grew out of a need that we saw years ago for clients to get help from us, beyond just the traditional financial audit and getting tax returns done. It was the much more the forward thinking, and that whole service line really revolutionized our business. Just a hugely important part of what we do. So yeah, it's a combination of both. It's looking ahead to what you think's gonna be out there, and then also being, having ears to the ground as we understand what clients are asking for.
Yeah, that makes sense. And how much of your team is allocated to staying abreast of new regulations, new laws from Congress, state and local municipalities? I guess it can get pretty granular in where you're located and what your tax implications are. How do you guys stay on top of all that?
Yeah, no, it's It is an ever-changing world, and quite frankly, honestly, it's everyone is kind of a little bit has their ear to the ground, and it's always kind of keeping a finger on the pulse and what's going on in tax legislation and any changes in the accounting world. But our firm also does a great job in terms of training our staff and individuals. So we have pretty frequent trainings on anything new that comes out. We try and get, ahead of it, make sure everyone in our office is aware of it and knows how to kind of tackle things going forward. So, but yeah, I mean, I again, as we're all kind of CPAs or most of us in our firm, we all kind of are, I don't know if it's just inherently in our nature, but we all kind of keep a little bit of an ear to the ground to see what's going on.
Yeah. So if you had a magic wand and you were the kings of the world and you could dictate like how taxes work, you have one shot and you have to get the answer out in under 5 minutes. What would be the best tax structure?
Wow, that's a tough one, isn't it?
Yeah, tax structure from the government's perspective.
Yeah, from the king of the world's perspective, like it's going to be 10% or it's going to be as complicated as possible, whatever it is, right?
Well, you're also asking us to put ourselves out of a job, probably. That unfortunately.
That's true. But you're going to be king of the world in this scenario, so.
True. Greg, what's your thought first on this one? I'm curious. That's a good question.
Yeah. Hey, Gary. Something that I've just seen more and more every year is the trend to more complexity, right, and more catering to, unfortunately, to special interests, right, in the legislative process. I'm actually a big advocate of a huge simplification. I think that as Joe said, these complexities certainly they do help us, and it's fascinating. It's a huge challenge to keep ahead of changes, let alone properly report changes that have happened in the past. But yeah, a huge amount of simplification is something that I would advocate.
Yeah.
I echo that 100%. I don't think every single, every person in the US is a taxpayer, and I don't think every single one of them should be, essentially required to have a CPA license or go through the studying or need someone that's done so in order just to file their taxes. It's pretty ludicrous at times, for sure.
Yeah. Okay. So, when would be a good time for startups in the state of Utah to reach out to Squire and Company to help get pointed in the right direction from the beginning?
Yesterday, man, as early as possible, honestly. I mean, if this thing is, not to say that things can't be unwound and kind of put, step back on the right path. But man, it could save you money. It could save you so much more time if things are just done correctly from the get-go. So as soon as, entrepreneurs are starting to go through the process where they're no longer just a sole proprietor, they actually need to put a business entity together. And even if they are a sole proprietor, honestly, but working with an accountant, a CPA, a tax, advisor, outsourced, controller, CFO type individuals, it'll definitely be beneficial. And I know there's kind of this cost benefit analysis you have to do to say, okay, well, I don't need to go pay hourly rates at certain levels, but just an introductory call, I think is always extremely beneficial, just again, to kind of get you on the path and know what your futures should look like. And then from there, utilize your advisors on an ad hoc basis. But without a doubt, I think the best approach is always to have a good plan in place prior to kind of going down that path. And is it always practical? No, because we know entrepreneurs and in the entrepreneurial spirit is you guys are bootstrapping and you guys are, flying at the seat of your pants. So I know it's not always practical to do so, but would definitely encourage individuals to meet with their advisors. I mean, we're here for a reason. It's definitely to try and help.
Yeah, absolutely. Awesome. Well, thank you so much, Greg and Joe, for joining the podcast. I know we had folks from Squire and Company on a lot of the town halls last year for PPP loans and things like that. And you guys have always been great and supportive to Silicon Slopes. We appreciate that, and appreciate you guys joining.
Thanks so much, Garrett. Appreciate
Yeah,
it.
thanks. Love everything you guys are doing there. Keep it up.
All right. Thank you.